What's up everybody? Welcome to the Stocks channel. My name is Cory and today in the stock market we continue to sell off as we are quickly approaching June lows and the price targets to the downside. Is it time to start buying or is it time to run for the hills? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today in SPY we were down 0.84% and we see SPY is getting extremely close to our price target at 368.5 and filling that gap at 369.5. Now real quick, I want to address the investors out there who are not looking to just trade day to day, and you need to start evaluating the risk reward going long at these levels because we are approaching the June lows. And as we can tell, that is exactly where we bounced last time. And sometimes in these markets, you do get a W-shaped bottom, which is going to end up looking like a double bottom in the longer term. And there's a real possibility that could happen because as you can tell, our price target is very close to the previous June low. So there's a few things we can talk about very quickly. And we do have the back test that says we are likely seeing the bottom back in June. So if that back test is not going to fail for the first time this year, we cannot close below SPY 366, which means we would find support around the price target right here around 368 to 369. Now there is one common mistake that a lot of people make, and they assume that the market is guaranteeing that we have to go to a price target, and they do no buying on the way down. They just wait for that price target. And sometimes it is possible the market just reverses right from here and starts heading higher and we never actually reach the price target, which means you never actually started to do any buying. So as an investor, I cannot stress it enough. There is no reason for you to try to perfectly time the bottom. So if you are bullish in the longer term and you want to buy at the June lows, do not wait until we get to the June lows to do any buying. Start accumulating slowly and start adding into your position over time because right now from today's close, we are only 1.5% away from the price target, and there is a lot more potential upside than potential downside if you're going to make the assumption that the June lows hold. So risk appetite is going to start increasing the lower we go as a contrarian because if you're bullish in the longer term, you should not stress out about perfectly timing the bottom. Now going back to addressing the traders, you do need to manage your risk very tightly because as traders, you cannot get caught holding a position in the wrong direction unless you have a very clear risk management strategy. So if you're buying long as a trader in this falling knife scenario, you need to understand you need to manage your risk around the June lows, which means if we do see the capitulation, you will not just be caught holding a bag because you did not manage your risk. Remember, I have capitulation below the June lows because that is exactly where you're going to see high volume selling if the June lows do not hold. Now, based on the price target, we do have until the end of the month to get there. So there is still the possibility in the short term we could get a bounce and then still go down there and reach that price target by the end of the month. So just because this arrow does look like it's going down in a straight line, we know price action never goes in a straight line. There's always going to be ups and downs along the way. But that is the level we are looking to hit by the end of the month or sooner if we just continue to go straight down to that target. So make sure you understand every single possibility in the market and have a trade plan that allows you to scale into your trades. That way you don't have to perfectly time the bottom. If we break through this bottom, that's completely fine. It means we're going through a prolonged bear market, which means we could see SPY go down for that next leg lower, which is going to be around 350. And then if 350 breaks, we'll take it day by day and we'll be looking for the next target lower. But right now, the only levels we care about are the levels that are right in front of us, which is going to be those June lows and that price target at 368.5. Now, if we do start to bounce, we'll be looking for that resistance right around 385 and of course the critical risk level at 390. And we remain risk off as traders below 390, which means if you're taking long trades, you shouldn't be swinging them for any prolonged amount of time unless you're investing, which means you're holding for at least 12 months or longer. So this is a very exciting time in the market and there's a lot of opportunity at these prices. So don't miss the boat. If you're an investor, don't be afraid to start nibbling and start adding into your positions at these prices, knowing that if we break the June lows, you will need to have a backup plan, whether that's cut your losses or continue to buy even lower. On the NASDAQ 100 triple Qs, we were down 1.23% today, and the triple Qs did gap down and leave the gap open, so there will be a gap to the upside, which shouldn't be surprising because that's the theme of 2022, where we have gaps absolutely everywhere above and below on the chart. So look for that strong resistance to continue to be around that area at 284, but as you can tell, price action did stop at support at 280 today, and that level has not yet broken down. So look for a trading range in the short term on the triple Qs between 280 and 284, and whichever direction breaks first is going to tell you where we're likely heading. Below 280, we'll be looking for 271, and then the price target by the end of the month is down there at 267.5. And if we break back over 284, you'll be looking for a retest of the high at 291 and that risk level at 293. Take it day by day and understand this is a great opportunity whether you're shorting at resistance or buying at support. This is going to remain a very volatile market, which means it does favor very good trading, but it's also getting to levels that are very attractive for you investors out there as well. On the Dow Jones, we were down 0.43%, and you can see the Dow Jones is leading the way lower because right now the Dow Jones is sitting right exactly at where we were closing around the June lows. So the Dow Jones is going to be a leading indicator of whether or not the June lows break, which is going to be this level right around 298.7. Below that, we do have a lower price target, which does undercut the June lows with that target down there at 293.5. But remember, there is no guarantees in the stock market, so I'm not telling you that we need to break the June lows, but that is the current price target of where we could be heading. Below that price target will likely fill the gap at 285, and that is going to be a very critical level to the downside. Upside resistance will be up here at 305.8 and that critical risk level at 312. On the Russell 2000 IWM ETF, we were down 2.25% today, and we did lose that support at 174, which means we're more than likely well on our way to the next price target at 168. You're managing a risk to the upside at resistance around 174.7 and 178, and we'll need to break all the way back above all of that resistance to start losing the downtrend. The next downside price target will be 168, and then the June lows at 163.75. And as you can tell, relatively speaking, the Russell 2000 is much farther away from the June lows than what we see in the Dow Jones. So relatively speaking, the small caps are looking a lot stronger. On the ARKK ETF, we were down 4.29% as we see ARKK slicing through support at $40, which means it could be coming back down to the lows at 36.5, and below that we'll be looking for a brand new low at 33.7. Upside resistance will be $40 and 43, and you can't get bullish until we get all the way back above that resistance trend line just above 43. On the VIX, we were down 2.29%, and we continue to see the VIX struggling to break and close above 28. This is a very interesting thing in the VIX that the market is going lower, but the VIX is having trouble going higher, which could be telling us that fear is running out as we approach the June lows, and that does increase the probability the VIX could crush down. However, VIX above 24 is still a volatile bear market, so be more cautious while the VIX is elevated above this level, and definitely get more cautious if we see the VIX spiking above 30. On Bitcoin, we're currently up 4.3%, so for whatever reason, Bitcoin is looking relatively strong today. On a day the rest of the market was selling off, Bitcoin is actually rallying off the lows, and we did get that bounce off of that level right around 18,000. So whether or not we're going to 17,000 is to be determined because we need to get consecutive closes below this support at 19,000 to confirm we're going lower. The bull breakout in Bitcoin is going to require us to get all the way back above 21,600 and the previous daily high just above 22,000. So wait to get bullish as a trader until we can break through some resistance or set your risk down here right around 18 to 19,000. On Amazon stock, we were down 1.04% as Amazon is getting very close to the downside price target of support at 115. Below 115, we could come all the way back down to 106, but we do have a gap to fill to the upside just below 126. And we have strong resistance around that zone at 126 all the way up to about 130. If we can break back above that gap and start turning some of these levels into support and start seeing higher lows and higher highs, we can get more bullish. But right now, Amazon is in a downtrend, and it does look like it has a little more downside to go. On Microsoft stock, we were up 0.85% as Microsoft continues to look weak, closing below the June lows for the second day in a row, which is that level right there at 242. Which significantly increases the probability Microsoft is trying to go lower to 231. Remember, this is a large cap blue chip company, and it's not a great sign to see it breaking below the June lows because it could be a warning sign that the indices are about to do the same thing. Bulls will want to see Microsoft back over 242, and then it could run up to retest that resistance at 252. On Nvidia, we were down 5.28% as Nvidia lost that support at 129 and took out the lows at 126. So we're back into a risk off on Nvidia stock while we're below 129. Above 129, you still have resistance right around 135 and that gap close at 142. And above the gap close, look for strong resistance at 145. On Tesla stock, we were down 4.06%, and you can see that clear rejection on Tesla stock yesterday did continue with the selling today, and we did close the gap at 289.5, and we did find support at the 50 daily moving average. I still favor Tesla to turn into an inverse head and shoulders on the daily chart, so I am not bearish on this stock in the medium term unless we break down below 283, and if we hold above 283 and we continue to rally back up towards 309, I do think that is going to be an incredibly bullish pattern. So it's very simple in Tesla. You can stay risk on as long as it's above 283, but you instantly need to get ready for a retest of the lows at 270 if we break down below that level. Upside resistance levels will be 292, 296, and 304. On Apple stock, we were down 0.64% as Apple did get rejected from resistance at 154 and did hold support down here at 151. So consider it a trading range between 151 and 154 until one of the levels break down. Above 154, you're looking for resistance at 157 and 158. And below 151, you're looking for support at 150 and 147. On the financials, we were down 1.68% as the financials look like they're going to continue to finish that last leg lower to fully close the gap to the downside, so stay risk off while we're below 32. The industrials were down 1.5% today, closing below the lower Bollinger Band and getting very close to support at 85. The healthcare sector was up 0.53% today with a dead cat bounce below the lower Bollinger Band, but still below resistance at 125. The energy sector was down 0.36% today with the second day in a row closing below the 50 daily moving average, which significantly increases the probability we're going down to close the gap at 69. So jumping back over to the S&P 500, keep in mind as we approach the June lows, you can start to take on risk because you have a very clear, well-defined risk level at the June lows. And then you will be expecting a much lower low and or capitulation if we undercut the June lows and continue to see high volume selling. Remember, in this market, you have to take on risk to get the rewards, and you have to manage your risk very tightly so that you don't lose too much money. If you're not managing a risk, you're not going to be doing this for very long, and we're getting very close to very great risk reward ratios as we approach the June lows. With all that being said, you still need to respect the downtrend, so don't get reckless. This is still a downtrend until it's not, even though we are approaching very critical support levels that do look very attractive. Also, don't forget I still have a promotion code for 50% off your first month of bank trade alerts. All you need to do is apply the coupon code Labor Day, all one word, no spaces, at checkout to get 50% off your first month of bank. Bank only trades the ETFs TQQQ and SQQQ and sends you all of your buy and sell alerts directly via email and text message. If you're looking to become a better price action trader, consider joining the Stocks Channel Trading Discord community where you get access to all of my intraday updates and analysis. You can find out how to join Bank or the Stocks Channel Discord by clicking on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.